All right, so today is Monday, August 5th. I'm a little bit late on making this because it's been a very busy day. But I woke up this morning to pretty much a boatload of texts from people panicking on what was going on in the stock market. So just to kind of quickly summarize what happened, we opened up this morning and pretty much across the board, a lot of stocks on the market had collapsed. And I think not only in the United States but internationally. From my best judgment, looks like the collapse was pretty much consistently in the 5 to 6% range. Which, to help people kind of visualize that, what that actually means is on the stock market, we often see about 10% per year. So basically what that means is that on average we saw just about a ratio of about 6 months. So we lost about 6 months of progress, just pretty much in a single day over the weekend. So, anyone who invested any amount of money in, the last 6 months, all these people are pretty much going to see their money gone. Anyone who invested over 6 months ago, on average, probably may have seen a lot of their progress disappear, but maybe they are not underwater on average. Again, every stock is different, so obviously it's a case-by-case basis, but that's the best kind of visualization I can give regarding the matter. So, what are we up against? And I had a lot of people texting me today asking what to do. And my suggestion is what it's always going to be: just ride it out. Do I think it can get worse? Yes. I think around 2020, around COVID, we obviously had a lot of economic turmoil. To the best of my recollection, without having to Google anything, we probably lost about 2.5 years of progress total, through that whole turmoil before things started turning back around. That is on the S&P 500, so the top 500 companies within the United States. Believe it or not, on the S&P 2000, so the 2000 top companies, so this is more small businesses, we actually have not recovered. We've actually had zero progress in the last 4 years on the S&P 2000, to the best of my recollection, without having to Google anything. So we actually have not made any progress, in the United States as far as smaller businesses are concerned. The S&P 500 has made progress, but mind you, a lot of that progress is centered in the top 10 companies. So the top 10 companies within the United States are kind of propping up the other 490 companies, which really aren't really seeing great progress. So we're not doing too great. This may or may not matter to you. It should matter to a lot of people. Even if you do not invest in stocks, you may have retirement accounts that rely on these. So if you have a Roth IRA or 401k, then this is going to pertain to you. If you have a Roth IRA or 401k, what's my suggestion? Just keep doing what you're doing. Just keep contributing. We know historically, the stock market goes up and it goes down. And, when it goes down, yeah, it looks like you're losing a whole bunch of money, but eventually it will come back. How long will it take to come back? That depends. I mean, if you lose 2.5 years of progress, it might be 2.5 years before you see your money back. And how long is the stock market going to be, not producing? So, it could be you lose 2.5 years. It could be 2.5 years to 7 years before your money comes back. But when this happens, you just got to understand any new money you're putting in, you're getting a good deal for that. So you're basically keeping your old position, but you're also creating a new position. And with your new position, you're getting, a good deal. So my suggestion is always going to be just to ride it out. But today was pretty bad. It's very indicative that everything is catching up to us because we are not doing well economically. We know this. Stocks are important because what is money? It's our security. We need money to survive, and it's one of our assets. So we have our savings, we have stocks, we have our homes. I mean, that's pretty much all we have. If you erase all of that, that's actually really bad for us as individuals, and it's bad for us, as a nation if, we're not all doing well. If the economy is kind of chipping away at our stocks, what do we have left? We have our homes, but, a lot of people do not even have our homes. Are we going to be up against our housing market collapsing? That might be bad for some people, good for others, might be a good entry point for people that don't have homes. But, this is just really not good. If this does not even apply to you, it really should. So again, it may apply to you in the fact that maybe you have a 401k or Roth IRA. I think that applies to a lot of people. So even though you are not self-managing that, it does apply to you. I mean, if you do have an account, Roth IRA or 401k, I just suggest not even looking because you're going to cry. In the coming year, this has been a pretty bad drop, losing 6 months of progress in a single day. We could be losing another 2 years over the next year. 2 years. This might not be the end of it. This might be just the beginning, because often the beginning of really major collapse, has some sort of event like this. And if you if you don't have a Roth IRA or 401k, maybe you invest in your own stocks. I think people that invest in their own stocks personally are at much higher risk of jumping out prematurely because of fear. So if you do manage your own stocks, again, my suggestion at this point is to just hold tight, and as the market is crashing, you continue to buy because you're going to be getting a good deal. So, the best financial advisors always say when the market crashes, it's kind of going on sale. So it's giving you an opportunity to buy. One thing you might want to toy with is doubling down. Some people might just sell, take the loss, maybe make some adjustments and initiate new positions. But basically you definitely don't want to let panic set in. We lost 6 months of progress. We might lose 2 more years of progress. So, we saw a 5%, 6% loss today. Over the next year, we might see no growth, and we might lose another 20% or so. And that's going to be scary for a lot of people. That means if you have $20,000, you might be looking at $15,000 or even less, depending on where your stocks are. Some companies lose more than others. The other thing that I'm kind of noticing, through this whole turmoil we're seeing today, is crypto is not really what it's supposed to be yet. So we know gold is the universal currency, and basically gold holds value independent of economic turmoil. It's always going to be worth what it's worth. Its value is intrinsic. So when the economy is shaken and the values of the economy is going down, gold value actually goes up because it's actually holding its value. And basically, as the value of the dollar goes down, that means the value of gold goes up. It's not that the value of gold is going up, it's just its value is not changing, it's unwavering. So what we saw today was cryptocurrencies crashing with the market, just like stocks. So we are basically now seeing that crypto is a luxury item. It's dependent on a good economy. That's not what it's supposed to be. You know, people are hoping that Bitcoin is going to be the successor to gold. Maybe it will be, but inherently I do think crypto is not what it is supposed to be yet. So just like stocks, now might be a good entry point for crypto. And if you do not know you know, how to invest in your own stocks or invest into crypto, leave a comment below. I'll try to help you out. You know, I've done a lot of videos on you know, kind of like the basics of stock investing and all that. So yeah, that's just my thoughts on the matter. I just wanted to put this out there because you know, I've been kind of chatting with people throughout the day. You know, people that have you know, I've known for years that have been investing in stocks, you know, 10, 11, 12 years. And people I've known investing in stocks for less than 3 months. So to either experience level, again, my suggestion is always going to be just hold on for the ride and shut your eyes for 2.5 years. It's 2024, so your sights should be on 2026 and maybe 2028 to pull a profit. But that is the stock market. We think in 7-year terms. We don't think in 6-month terms. 7 years. Every 7 years, the landscape is completely different. And that's just the nature of stocks. And if you can hold on for 7 years or 14 years, that is where serious money is made. Serious money is never really made in a 6-month term or a year. And that's what people have a really hard time grasping on. If your you know, if your time frame is 6 months, you know, think about probably opening a business or doing things with the stock market that I have no experience with. This is like options trading and different stuff like that. I have no experience in that. My only experience is really long-term asset holding. But yeah, any questions, feel free to message or comment. But I just wanted to throw my 2 cents in on the matter. Things ain't great, and things may get worse. Or this might have just been a little market correction, and maybe things will be a little smooth, you know, in the coming months. But we'll see. Put it this way, I won't be surprised if we lose another 15 to 20% in the next year. But hopefully not. But it's definitely out there, and if it is, just make sure you're buying the entire way down, because when it starts going back up, you're gonna get good gains on your new positions. And make sure you don't sell your old position, because you'll both make your money back on that old position, and you'll add that to your new position, and you'll come out better for it. But definitely don't, you know, don't sell, because you're gonna lock in your loss. That's not cool. So any questions, let me know.